I am a professional investor competing in the US Investing Championship, and I want to show you the way that I screen and look for new stocks. Now, this is coming from the Ask Me Anything Friday episode where one of our viewers, Fote in Florida, said, do you think, no, that's not it. Can you go over how you sort the scanner results if the bookmarklet's not working? So the bookmarklet is something created by one of our incredible outliers named Vaclav, but I want to show you the, I guess you could say, the old school way to do it, right? So first off, you got to run through the whole process, right? You got to run through the entire process. First, SPY. How does the SPY look today? So if we pop into SPY, first off, we want to see the SPY is in a bullish trend. And when you pop into SPY, you can actually see it's in a bullish trend when it has a green background. That makes life super simple. Next, that it has a buy signal. And you can see right here on the chart, it has a buy signal. I also like to keep it on my watch list so I can see that as well. Next, the Fear and Greed Heatmap. So that's the next place that I go to is I look at the heat map of the SPY and you can see, ooh, it has been coming down and it bottomed and is now pushing back up 15. Oh, no, wait. It is flat. It is 15.15 for 2 days in a row. Okay, cool. So it's not rising, but it isn't falling anymore. So that actually is very promising. So I won't be taking any new trades today for me because this no longer fits any of my rules. However, that's a great start. Let's keep going here because the question was how to get to the bookmarklet, right? Or how to get to the scanner results. Next is I like to look at the full stock's breadth. Now the breadth measures how many buy signals and sell signals we have. You can look on the bull and bear list to get that information, or you can come over here and let that load for a second. Of the full stocks over here, this is showing that we have more sell signals than buy signals. And the sell signals are accelerating. The buy signals are evaporating. Okay, that's what this is. This is what that represents. And in fact, I created this indicator. This is my personal baby. I made this. I'm very proud of this. Next, at the bottom down here, shows you how many stocks are trending up or trending down across all the stocks that we cover. Now you'll see right here, getting more and more and more, the green and the red means more uptrends, less downtrends. That's what you want to see. We don't have that at the moment. At the time of this recording, we don't have that, but that can of course change day to day. You can see how quickly it can change. So let's say if all these were true, I would then go to the next step. I would be looking first at the OVTLYR channels. That's exactly what we talked about down here. This is the OVTLYR channels. If it had both more uptrends and less downtrends, that's a market score of 2. So you can take any sector at that point. If it is a market score of 1, you want to make sure the sector has a score of at least 1. And over here on the left-hand side, we make it super easy because we actually show you, right, what the score of those. So for example, financials has a score of 0. Energy has a score of 1. So if we go over to energy real quick, you'll see that it has either less downtrends or more uptrends. Yeah, more uptrends. In fact, I heard yesterday that every single stock in the energy sector is above its 200-day moving average. The energy sector is on fire right now. All right, then I like to look at sector breadth. Now, we have a little tool right here called Summary, which does a lot of the work of the bookmarklet right here. This is actually super, super handy, right? So when I'm looking to trade, I want to make sure that the sector relative greed is greater than 1. So I look at the sector greed versus the market greed. So I'll compare the SPY at 56.15 to everybody else. Which sectors are greater than 56.15? You've got discretionary, you've got financials, you've got industrials, you've got materials, real estate, staples, and utilities. And so several of them do have a relative greed score greater than 1. But on that fear and greed, I want to see it under 70 yet rising. So we'd be looking at energy under 70 and rising, staples under 70 rising, and utilities under 70 rising. But yeah, both of those are greater than the SPY. By the way, did you notice anything? The market's having weakness. What are the sectors that are popping up right now? Utilities and staples. Utilities and staples are the defensive plays. When you see utilities and staples starting to take off, that is a bearish sign in the market. Interesting how that works, right? All right, then let's say that I narrowed it down to a single sector. Let's just use staples, for example, because it has positive breadth and the OVTLYR channel is actually -1 today, but that's fine. We'll just use this as an example. Then I'll go over to the screener. Pop open the screener. On the screener, these are my screener criterias. Pretty simple, but I'll go through them each one by one. Just give it a second here. Okay. So sector, I'm going to change the sector to just be staples. Okay, just staples. Then industry, all the industries, but you could sort it down: beverages, discount stores, food products, whatever. Outlier signal return. This is an instant backtest. How have the outlier buy and sell signals performed? Capital efficiency, I leave wide open. What capital efficiency means, let's go to this one here, AES. What capital efficiency means is if you bought and hold from 2020 to today, your average returns would be X. But if you had used the outlier buy and sell signals where you're getting in and getting out, right? For every 1 day that you would be in, your returns would be 13 times higher. So it's a daily returns comparison compared to the underlying stock. So this one's bonkers. I don't use that in my filtering, but you can. Totally up to you. 30-day average volume, I like to be over 1 million. Current buy signal, I want to have a buy if I'm going to go long and not a sell. Price change, I just leave it wide open. But you could say, I want to look at things that have had a small move or maybe even a big move over the last 10 days. Market cap, I leave wide open. Price range, I used to be a snob and have a $20 price filter. Now I'm just bougie with a $10 price filter. Fear and Greed Heatmap value. And of course, you can put a max filter on there as well. Fear and Greed Heatmap value. I don't care. I want all the Fear and Greed heat maps over there. Heat map moving up. Remember, this is the Fear and Greed that we talked about. This value right here for the stock, we want that moving up. And then the overlay indicator, the green background over there. Does it already have an uptrend? So running this, let's hit it, apply filter. So this is going to have different sectors. There you go. We could look at Unilever, for example. 27% outlier return, but 2.94x capital efficiency. Wait, what does that mean? Let's pop into here. So if we go to the performance summary up here, we can see an instant backtest. Now, the end result doesn't seem all that different. In fact, over the last 6 years, I guess at this point, we're looking at 27.5% for outlier, 29% for buy and hold. Well, clearly buy and hold so much better, Chris. In fact, I got to pull out Derpy Joker for when I do the Derpy Joker voice. Well, clearly 29% is better, Chris. Outlier sucks. Or does it? Or does it? Because during that entire time, see all these flat lines right here? You were only in the market 31% of the time. You were only in this stock 31% of the time, according to the backtest, which means 69% of the time, you could be doing anything else in the whole wide world, which means capital efficiency is 2.94x, right? So nearly 3 times the returns on a daily basis. So think of it this way, right? If you're in the market a third of the time, yet you come up with roughly the same result, that means on a daily basis, your returns are basically 3 times higher on a daily basis. Isn't that cool? Put a thumbs up in the chat if that makes sense to you. Here, I'll even do it. Put a thumbs up in the chat if that makes sense to you. That's what capital efficiency means. And that's actually a really perfect example of how it can end nearly at the same point, but your capital efficiency can be almost 3 times as much. Okay, so the question was, how do you go through these, right? How do you go through these? So I personally like to sort by outlier signal return. Now, you've already got it sorted in by all this. And one way you could do it, you could copy it, right? I used to do it this way before the bookmarklet. Copy it. Just literally Control-C, pull up Excel, put a blank spreadsheet, and Control-V, right? If you want to do it that way, resize your columns to fit. There you go. Now you can sort by outlier signal return right here. There's one way to do it. I mean, there's all kinds of different ways to skin a cat, right? If you want to call it that. But I'll tell you, it does make it easier when you have some shortcuts. So using that bookmarklet is pretty great. And of course, you know, we all should be very thankful to VacLab for allowing us to do that. But that is how I find stocks. That's exactly my process, top to bottom, how I find stocks. Let's see. Tesla Tech or Testa Tech. Oh no, Tesla Tech would be cool, right? When you are interacting with the market, you say mark to market. Is that because you've adopted and filed your accounting method with the IRS mark to market? No, it's because I'm a finance bro. I'm not like every other YouTuber who claims to be a trader. I actually have been trading for 17 years. I actually worked in the finance space since 2009. And yeah, that is a finance bro term, mark to market. It is how you say, this is the current price today. Let me mark it to the market. Okay, there you go. Do you think we'll have to rerun backtests when we move to 24-hour trading? I hope we never move to 24-hour trading. I think that would be a horrible situation. The reason being, right, the reason that we have market hours is for sanity's sake, right? Sanity's sake and business hours sake, right? If we move to 24-hour trading, you might have to change entire industries to work around that. And I don't think that that's going to happen. And truthfully, I don't want that to happen. Do you close below the prior day's low once rolled? No, but previously I did. Now that's no longer in the plan. As of last summer, when we created our new trading plans, that's no longer in the plan. That actually proved to lower our expectancy, so it was removed. Let's see. Is there an order block in play on silver? Well, let's take a look. Let's go to SI. Not developed yet. It could make an order block right here. But of course, short-term order blocks, like it had right here, short-term order blocks, they can be ignored. Reason being that they can be ignored is that, listen, if you're down a couple bucks, like from 2 days ago, and then you can make it back that fast, that's fine. Longer-term order blocks, like on PPTA right here, this one from whenever it was, that's going to have a lot of sellers who are ready to get out. They are finally getting back to break even. So that is ones you don't want to ignore. But ones from a couple days ago, don't worry about them. Don't worry about them. Like right here, this order block was created and just destroyed it right here as well, right? So good question. Remember the psychology of an order block, right? People are stuck in this area. They are trying to get out at break even as fast as they humanly possibly can. And when the price comes back into that area, and I've shown you time and time again, that order blocks are not just random spots on the chart. They actually do work. Not every time, of course, because there can be plenty of buy orders to push them through. But if you're stuck in a stock for 6 months, 8 months, even 6 years, and you finally get out at break even, you're going to sell as fast as you humanly possibly can. That is the psychology behind order blocks. Let's keep going here. That's a great position from Dunk, or great question from Dunk. As your account grows, do you increase positions if they've been running for weeks or months? No. In fact, I do the opposite. If a stock is running, in fact, we can look at several right now. Right? We can look at several right now. Let's look at NEM. NEM, when we got in, has gone up 1, 2, 3, 4, 5 ATRs from our entry point. A huge move up, right? Giant move up. Yesterday, big nasty red candle. Today, a potentially another big nasty red candle. But you know what I did? Rather than adding to my position all the way up, I reduced my risk all the way up. In fact, let me go over here real quick. We can actually talk about how much I reduced my position all the way up by rolling. On NEM, I only have 6% of my risk left. 6. How did I have a trade that has only 6% of my risk left? Because when I entered it, it cost me $955. I've already booked 896. Okay? 955. I've already booked 896, which means the difference between the two is how much risk I have left, which is only 6%. Now, I like to give this example here. And this is a perfect representation as to why you want to reduce risk as fast as you can. Because you don't know when it's going to turn around, if it's going to turn around. And if it does turn around, it can do something like this, where it's a big, nasty move against you. Let's say you send out one train from the station, right? It's choo-chooing along, and that train turns around and starts coming back. But during that time, you've already removed 94 out of the 100 boxcars that were on it. Okay, so the one that's coming back is just 6 boxcars. No big deal, right? Okay. You relax. Come on back here, buddy. You're fine. We'll get out of here. No problem. But let's say that you put on 1, 2, 3, 4, 5. Let's say you put on 5 boxcars as they're going up. Okay, now hear me out. Hear me out. Every time you add to your position, you are increasing your risk in the position. So rather than decreasing it, remember, I sent out a train with 100 boxcars. It's coming back, but it only has 6. Meh, no big deal. If I send out one train with 100 boxcars, and another, and another, and another, and now I have 5 boxcars, and they're all heading back at me, 500 boxcars full, I got a huge problem. I'm about to get run over by the trend train, and it's choo-chooing me to death. Okay? I don't want that to happen. That hurts. That hurts bad. Horribly, no good, very bad. So I personally reduce my risk all the way up. De-risk the trade as fast as you possibly can. Hope that's a decent answer. I thought it was a good analogy. Was that a good analogy? Give me a thumbs up, engagement baiting again. Give me a thumbs up if that was a decent analogy. All right, let's keep going. Thoughts on SPXL? I think it's an ETF. I own some right now, and I'm going to hold it until I have an exit signal. That's my thoughts. I don't care. and it's nothing personal. It's just that all stocks are bad. All stocks are bad, except for SOFI. Hang on. I'm going to start using Derby Joker a lot more because the voice. Except for SOFI. SOFI is the greatest stock in the history of humankind. Don't you understand? It's the future of finance. It's only going to go up. Oh, SOFI had earnings. Let's go look at SOFI earnings. SOFI to the moon, baby. To the moon. Yes. SOFI is crashing up to levels after earnings not seen since Wednesday. Yes. Yes, I told you. Earnings are so smart. It's crashing up to levels that I haven't seen in about 48 hours. Told you. Jazz in Dallas. What's up, Jazz? Earlier this month, we talked about Rocket Lab reaching its all-time high to let it run, and there are no order blocks. What is the cause for the recent resistance blocks when there were none? Okay, let's go take a look at Rocket Lab. Well, think of it this way, right? These people who were letting it run, and maybe you're included in that, are now stuck, right? We had a little order block that got created. And by the way, you can make your charts exactly the same as mine. Go into, don't worry, I have Stream Deck buttons for this. Go into the FAQ and member contribution section of our Discord. You get access to our Discord after you become an OVTLYR. OVTLYR is only 82 cents a day, by the way. FAQ and member contributions. Then go to TradingView. Once you get to TradingView, you'll see the official DeepThought indicator. This is the one that'll give you these order blocks on here. Scroll up a little bit further and you'll see the value zone. Also a super important one that you want to add to your charts. 100% for free once you become an OVTLYR. So these people right here are stuck, right? They're stuck. They created the order block because the order block was calculated after the big move up, followed by, in succession, a quick move down. Now, can this be overrun by buy orders? Absolutely. Right? Short-term pullbacks like this are not scary for most individuals. But let's see if there's any old order blocks on Rocket Lab that we could use. Let's see. And of course, you can see when the buy orders just overwhelm the sell orders, it's going to go up. It's just math. I don't see any old order blocks on here that are going to be useful for a demonstration. But short-term order blocks, part of my plan. Now, granted, this is my plan. My plan has been back-tested. My plan is proven. All I have to do is execute the plan, right? My back-tested plan shows me a 2.25% expectancy with a 56.94% win rate. If you don't have these numbers, you don't have a plan. Make those numbers happen. If you need resources on how to create a plan, go to the playlists on my YouTube channel, and it will show you in the OVTLYR University playlist. Give me just a second here. When I'm in my own personal YouTube account, it'll show you all my playlists, like, marketing, watches, stuff like that. But if I go to my dummy account here, go to the OVTLYR University playlist for Bravo and Alpha, and there's a no holds barred everything that I've ever learned in trading courses right here for free on YouTube. Okay, so back to this. Don't stress on that if it's not part of your trading plan. For me, I would not take one that's within 2% of any age. I would be waiting to get in on top of it. But that's my trading plan. You need to come up with your own rules. Dr. J, on the bottom right, you would click the black arrows, the black box with arrows, and it'll take you today on the chart. Oh, yeah? Oh, yeah? The black box with arrows, bottom right. I don't see a black box with arrows, but I believe you, my friend. Swami dude, can you explain SPXL SPY? Is it some... Yeah. Okay. So there are different types of ETFs, right? So the SPY ETF is based on the SPX. SPX. This is the actual market right here, the SPX, right? when you see, you know, the S&P 500 hit 7,000 for the first time, this is the actual market. It is tradable through options, but not through, not that I know of, any sort of shares. So SPY, which is the most liquid instrument in the entire world because everybody wants to trade the market, is based on SPX. Okay, so this is an ETF based on the market. SPXL is a triple leveraged, in fact, you can see it right there, a triple leveraged S&P 500 ETF. So it takes the movements of the SPY, and then they do their very best to buy and sell whatever they need to buy and sell on the back end to make it be roughly triple. Now, it can be a little bit off, right? Like right now it says 24 basis points and this is 78 basis points. Like it's super, super close. There may be sometimes that disconnects ever so slightly, but it's going to reconnect really quick. Okay. So yes, SPY and SPXL are related, and it is a triple leveraged ETF. Are the stocks on the bull list in the order of signal strength? I think they're just alphabetical. Yeah, they're just alphabetical here. Now you can sort them by different ways, right? You can sort them by volume, last day close, the green background overlay start date. You can do just uptrends or downtrends. You can filter by sector, right? I personally like to do the screener for all that kind of work. And then I think in the screener, you can sort by signal return. Yeah, high to low, like that. But keep in mind that if you have your criteria and then you sort outlier signal high to low, it's going to pull potentially really old buy dates that have been there for a while. So you could do it that way, but you might see something like from December that still is running, and it's gotten a little bit stale, like Costco. Let's go look at Costco. So Costco is still sitting on a buy signal, but it's an older buy signal. It's from a few weeks back, right? Now this move has happened. It's been running like crazy because it's already been running for 3 weeks at this point. It's beyond the time that I'd be looking to get in. On gold, is this what you mean by gap and crap? All right, let's go look at gold. You want to look at GLD specifically. Okay. All right, so this, let's talk about gold. This is a gap, right? So the gap is measured from the close of day one to the bottom of day two. Or you could do the opening of day two. That's fine. The opening of day two from the close of day one. That's only a 1.6% gap. It is a gap, but not a meaningful gap. In fact, when we back tested this, we were looking at gap sizes, and we tested 1, 2, 3, 4, 5, all the way up to 10. And we found at 5, that's the break-even point to be considered gap and crap. Now, gap and crap is where it, let's see. I know Palantir had a gap and go here. I remember this one. The gap and go is where it gaps up. So in this case, it gapped from the close here to the opening here, 7%. A gap and go is where it keeps going. Now, I can't think of one off the top of my head, but a gap and crap is where it gaps up and then it closes below the gap candle within 3 days. So yeah, this is another gap and go. It did turn around, but it's within 3 days. So for example, was it Google that had one? Hang on. I remember seeing one not all that long ago, and I was like, this is a perfect example. Throw one in the chat for me, a gap and crap. USAR? Okay. Maybe. How big is that gap right there? From the close to the open, it's way up here. Oh, yikes, a 23%. What I do is I put a line. Yeah, we can work on that. That is a 23% gap. Put a line at the bottom of this candle. If it closes under that low of that day, that is a gap and crap. That's a perfect example. Yeah. Oracle. What's up, Vaclav? Let's see. I guess you could say right there, another gap and crap. I don't know specifically at what time frame you're looking at Vaclav, but yeah, there's all kinds of examples. All right, let's keep going on questions here. I missed closing MP. What price did you close or did you roll? Oof. So Ken, right, here's this is me talking to you in the most loving way possible. If you have money in the market, you can't take your eye off the market. I got my money on my mind and my mind on my money, right? Snoop Dogg knows what he's talking about, okay? Because we don't want to let anything like that happen. Let's go to MP. Let's go to MP. All stocks are bad. Every once in a while, they act right. So linked down below in every YouTube video for 2026 is my portfolio manager. This has not been marked to date yet, okay? Because I've been on here with you. But looking at MP, I got out on January 22nd, this candle, because that was the sell signal date. The sell signal in OVTLYR said sell on this date. Now it's gone down quite a bit since then. Again, if you put your money in the market, you can't take your eye off of it at all, because there can be times just like this that's happened, which super sucks, right? I originally bought the 60 strikes. At one point, I rolled it. I don't remember what I did. It's in Discord. In fact, let's see, USIC trading room, and we can search for MP. Let's see, but I want it in this channel. Hang on. Here. Yeah, there. Too many steps. Oh, so I rolled it from the 60 to the 63. That's what I did. And then I closed the 63. I had an 18% gain on that. It wasn't the biggest gain, but certainly it's a lot better than it would be if I had held on to it, right? And that's because I had my trading plan, and all I had to do was follow my trading plan. So Ken, again, my friend, this is with as much love as possible. If your money's in the market, you can't take your eye off it for a moment, because all stocks are bad, and every once in a while they act right. No. OVTLYR updates overnight. It's overnight. The way that I double check, because sometimes Chris has insomnia and wakes up at like 3 in the morning. The way that I double check to make sure the data is done updating, so I actually just pull up the dashboard and I look over here to see if the last signal date is today. That's exactly how I do it. That's your timestamp. I have 100 shares of stock X. You mean US Steel? Because you know that like US Steel is X. Don't ask me why it's X, but US Steel is X. And I plan to sell it at a certain price when it reaches there. Oh, so you set a profit target. Okay. Is it okay then to sell options if I plan to sell it anyway? First, we got a lot of issues here. Are you rage baiting me right now, Joe? First, I don't want you to ever set a profit target. Not ever in the history of time do I ever want you to set a profit target. Because let's say that your X stock went from is at $100 when you buy it. And let's say you say, of course it's going to go to 150. I can see the future. It's going to go to 150. So you buy 100 shares on it. What if it never reaches 150? Are you just going to hold it until it reaches 150? Probably not, right? But because you've anchored to that point, your behavior is going to change, right? You're going to feel a lot of anxiety until it reaches that point. You're going to feel a lot of nervousness every time it ticks down. Okay. And maybe not even have a stop loss, because why would you have a stop loss? It's going to go to 150. Okay. And let's say, for example, that it does go to 150 and it blows through 150 and it goes on up to 220. Are you going to hold it all the way up to there? Or will you have sold out at 150? Hitting any sort of target, no bueno. Just remove that. Just let the stock do what it's going to do, right? You know when it's in a bullish trend by using the OVTLYR trend template, but you don't know duration or magnitude. So to that point, what I think you're saying is, can you sell covered calls on it? Sure, absolutely. But just keep in mind that if it does go up on that cover call, when you're collecting the call income each time, if it does go up and blows through your call strike, you don't get to participate anymore. You're cooked. I mean, you don't lose on the trade, but you lose out on the major gains because you've capped your potential gains. You don't want to do that either. You want to let your winners run out of control and cut your losers short. But if that's what you want to do in your trading plan, I'm not going to stop you. I'm not going to stop you. Hang on. I got to chug some HEB, Texas Pecan Coffee. What do you think about buying call options around 3 months expiration with a 20 to 40 delta? I think that'd be a big waste of money. That's what I think about it. Reason being is that these are cheap for a reason, right? They have no intrinsic value, none at all. So you're buying something way out of the money with the hope that it will go in the money, rather than it starting in the money, staying in the money, getting deeper in the money. Right? You're adding a layer of what am I trying to say? You're adding a layer of difficulty to the trade, because now you're going to have that theta working against you hard. In fact, hold on. I got a slide for this. Ooh, I got a slide for this. I got a slide for everything. I got a slide for everything. So theta is what you are buying. You are only buying theta. You are only buying time decay 3 months out. When you buy deep in the money, which is where I live, and it is more expensive. However, let's even break this down a little bit. Oh man, our account is down only to 62,000. Oh no. Remember, this account started at 50,000 beginning of the year. Okay, let's go over here and let's do SOFI, greatest stock in history. And we go to 42 days out. Well, you said 3 months out. So let's say 105 days out. Let's say you go with the 20. You said between 20 and 40, so I'll pick a 30 delta. Okay. This one here, the 31 strike on SOFI in May. Wait a minute. SOFI had earnings and it's not crashing up 1,000%. What is happening right now? Oh my gosh. Okay. The 31 strike, 105 days out. Mid price is $1.25. It is all extrinsic. Every single penny of this is extrinsic. Now, could you go deep in the money? Sure. Let's say you went with the 80 delta deep in the money. Okay, deep in the money over here. The extrinsic value is roughly the same in this case, but it's $9 versus $1.35. So for this example, in fact, it doesn't fit my thesis here because I don't trade this far out in the future. But typically, where I like to trade, let's go to 21 days here. Let's go for the 80 delta here. Right here. And then let's do the 30 delta here. Yeah. This one at 58 cents costs a little bit more in extrinsic. This one's at 45 cents. And because of that, it actually costs more on a day-to-day basis on your extrinsic value to be out of the money than it does your extrinsic value to be in the money. Now remember, every single bit that you have in your stock that you buy that's out of the money, in your option you buy out of the money, will decay. However, if it's only 15% of mine, I only have 15% that's going to decay. And it's going to decay at a different rate than yours. So personally for me, I wouldn't do that. But that's me, right? That's my trading plan. Listen, I've been doing this for 17 years. I'm trying to give you all the tools, tips, and tricks to help you make you successful. But people still want to do their own thing. And I'm not going to stop you from doing your own thing, but I am going to give you my advice. I am going to give you my experience, and you can take that as you want. Remember, 50% of the people who watch this, they watch it passively, they don't do anything. 25% listen, they screw it up because they're not paying attention, and they come back and they say, Chris, maybe so much of my shares. And then 25%, if you are actually paying attention, putting to work, and you're creating generational wealth. So remember, I get the stats. I want you to be in the successful 25%. Takis are so delicious, my friend. For the instant back test, do you not trade on the stocks where outlier returns are less than buy and hold? Actually, no. Like for me personally, as long as it has a positive return on, where's it at? Let me run the screener again. Must have gone over it. If the outlier back test, let's look at Costco. I don't know what this is going to be. Outlier back test at 276, buy and hold is at 238. That's fine. Let's look at Unilever. 27% versus 29%. That's fine too. All I'm looking for is positive expectancy. Think of it this way. Positive expectancy. Buy and hold is literally throwing a dart, holding it for 6 years, and seeing how it turned out later. Whereas buy and sell signals can generate a positive edge, positive expectancy. There's a big difference between this stock's up 29%, therefore it's so much better than outlier buy and hold. Keep in mind the capital efficiency here. Keep in mind the capital efficiency. So on a daily basis, you're making 3 times more dollars. Okay. And that's because you're not in it 100% of the time. You're in it 31% of the time because you have buy and sell signals that are showing a positive expectancy. So that's my answer to that. Takis. Why are you so delicious? What does the signal return mean exactly? Well, it takes it takes the combination of the buy and sell signals with the price. I don't know what you mean. I mean, it's literally just, hey, buy, enter, sell, exit. That's as simple as it. What about an order block on HL that's 46 years old? 46 years old? Oh my goodness gravy. Is it actually 46 years old? I don't know if the data in TradingView would go back 46 years. That's super funny. I mean, it's going. You're right. We're back in the 80s. Oh, that's so funny. There you go. Back to 1980. Goodness gravy. Yeah. Tell me order blocks don't work, by the way. Right here, before order blocks were even like a thing, right exactly there, it got monkey hammered. And again, 2 more times. Let's see. I don't know. Let's see. And now we're coming right back in that area. Am I actually saying that they're... Oh. Tell me order blocks don't work. Even 46-year-old order blocks. It just coincidentally was at that exact same spot. There's absolutely no way. Man, how about that? Who would have thought, right, Mike? Mike was just an itty-bitty baby boy back in 1980. Oh, man. Those people are dead by now. That's crazy, though, right? Completely random spot on the chart. What are the chances? What are the actual chances that something 46 years old still plays out? What are the chances? That's crazy. That is seriously crazy. Thanks for sharing that, by the way. That was a good one. Let's see. Are the ATR lines provided through OVTLYR in Discord somewhere? So we do have inside of the DeepThought right here. You can actually turn on show hide current plan markup. And what it'll do is it will populate on the screen right there, assuming you bought it at this moment, where the half ATR is, the 1 and 2, and then the -2 and -3. Now, as it goes through the day, this will move. So what I do is I use that as like a starting point. Oh, wow, look at that recovery. I'll take it. I use that as a starting point, and then I just manually add those. Because you can see right here, this 2 ATR is very far from where my original 2 ATR stop loss is at. You can see how far it's moved since then, because I bought down here, but the current price is up there. So yeah, it's there. And I do use it, but then I turn it off after I manually added my lines. So what I like to do personally is I've created lines as templates. So now it always is the same color, and it always has my text on it. So I don't have to go and do that, right? So if I click one of these, right, I can just say order block, boom. And it's like a purplish looking order block, right? Which matches the purplish looking color right there. Pretty cool, yeah? That's how I like to do it. But you can do it anyway. Let's see. Next question. Have I ever reviewed videos of everything money and their stock analysis tool? I don't remember doing so. Oh, hang on. Dr. J, following up. Go to the previous time in the chart. Okay. Dr. J is writing me a prescription here. Hang on. Go to the previous time on the chart. So let's go to Dr. J's birthday, which is 1969, January 30th. No, that probably won't work. Let's go to like 2019. 2019. There we go. Go to. Okay, here we are. Wednesday, January 2019. In that case, look to the bottom right of the chart. Bottom right of the chart. I'm going to drop off chat. Bottom right. I'm looking at the bottom right. I don't see what you see, my friend. Somebody in chat, tell me where to find it. Oh, that. Go to most recent bar. Bablow! Oh, very cool. All right. Dr. J wrote me a prescription for fun. Excellent. Thank you, Dr. J. I appreciate that. I appreciate that very much. It kind of like goes away, I noticed. Okay, very cool. Awesome. What would I consider? What I consider today's KGC move a gap and crap, I guess, or a gap and go. So KGC. So it definitely gapped down. No doubt, hands down about it. But that's not part of the trading plan. That's not part of the trading plan. It can be for you, but it's not for me, right? The trading plan here, like here, a gap and crap at any point means if it gaps up like this is a gap. How big of a gap was this? Here to here, like 3%, right? If that were 5%, and then within 3 days, it came back down, right? Let's draw on here. Within 3 days, it came right back down. That would be considered a gap and crap. So it definitely did gap down. Hands down for sure. I'm not going to lie about it. It definitely gapped down. Super sucks. But also at the beginning of the year, this was a $50,000 account. This is now 12.5 divided by 50. Oh no. I'm still up 25% on the month. Oh no, this is terrible. I don't know how I'm going to feed my family. That is why we roll, people. That's a perfect example of why we roll. Let's see. Am I putting order block on your wife's Amazon account? No, dude, Whatnot. That is such. Her thing is Whatnot now. I don't know if you guys have come across Whatnot. Type Whatnot in the chat if you've come across it. Holy goodness, she loves Whatnot. First off, she has unfiltered access to the credit card, which is obviously a problem. I need to put her on a leash, right? I just listen. If she were here, she'd be like, "Excuse me, what do you mean you put me on a leash?" But yeah, Whatnot's crazy. Because she will just spend so much money on there. However, the stuff she gets really good. There's really good deals, and she's really good about like setting her own price limits. But imagine, it's like eBay on steroids. It's like super fast. Everything is an impulse buy. Everything's an impulse buy. Let's see. Do you have any data on how long you're typically in a trade? Okay, Brian Anxiety, you changed your profile picture. Brian Anxiety. So, first we can look over here and we can see actual data. How long are we in these trades? So today is the 30th. So this actually is good to go. How many days am I in the trade? So on average, take an average, 10 days. Pretty cool, right? Pretty cool. Average 10 days. But I do have more data. Not a trust me bro data, but scientifically tested data. Average days in trade was 17.4. Roughly the same across all sectors as well. There you go. No trust me bros around here. How do you figure extrinsic if all you have is bid and ask? So first, I would definitely go into your broker settings and see if you can change that so you do have more than just bid and ask. I mean, surely your broker is going to have more than just bid and ask, right? But the way you calculate intrinsic and extrinsic, it's going to take some math, but you can do it, right? Let's calculate that for the SOFI February 20th, 21 strike. Let's get our handy dandy calculator out. And let's say the difference in the current price, SOFI's down 3%. This is impossible. No, SOFI is not allowed to ever go down. SOFI bros unite and buy as much as you can. Get those diamond hands ready so that we can take SOFI to the moon. SOFI is the future of finance. Oh, I'm going to love me some duper joker. Derpy joker. All right. So you calculate it by starting with the current price and your strike. So 23, we're going to have to round it because it's moving so much. 23.90 minus 21. That gets you $2.90 of intrinsic value. That's how much moneyness it has. So intrinsic value coming right at that spot. Pretty cool, right? It's almost like I know what I'm talking about. Now, extrinsic value here is going to be based on the midpoint. I personally like to do the ask because that's what you have to pay to buy it. So if the difference here between what it actually costs and my intrinsic minus 345 gives me 55 cents of extrinsic. 55 cents of extrinsic. That's how I would manually do it if I didn't have an extrinsic column right here. So it's actually simple, but I mean, if you're looking at 100 options in a day or even just 5 or 6, that's a lot of work. Odin Valhalla wealth strategies. Let's go. Odin Valhalla wealth strategies. Look at that. We got a Viking in our mix. Dude, one of my very favorite playlists on Spotify is Viking metal. Oh my gosh. I love Viking metal so much. They talk about Valhalla. They talk about Thor. One of the best bands on there is Brothers of Metal. Oh man, it's so cool. One of my favorite Brothers of Metal song is the story of how it's a story song, and I love that, right? So Thor's hammer gets stolen by the giants. And all of this is in the song, right? Thor's hammer gets stolen by the giants. Thor has to go get his hammer back from the giants. So he and Loki come up with a plan. This is in the song. I kid you not. And this is actual like Viking mythology right here. And I love it. This is so cool to me. So they dress Thor in a wedding dress to go marry one of the giants. Okay. This is real. Google it up. Thor and Loki walk in and they're like, okay, if you marry our sister, who is Thor in dress, then you'll give back the hammer, right? And the giants are like, yeah, of course we'll give it back. So they're like, okay, here's your present, Thor, the hammer that we stole from Thor. But Thor is dressed in a wedding dress, right, with his veil covered. And then he pulls off his veil and he's like, you done messed up, you mother effers. And he destroys all the giants all at once. What a cool story that is. And that is in the story song. Yeah, it's so fun. So fun. Anyways, Odin Valhalla Wealth Strategies, thank you for that tangent there. If you're rolling for the third time and there's an earnings coming up, do you close the trade or roll? Okay, we got two different things going on here. Rolling for the third time is awesome. Congratulations. You want to roll as many times as you can to reduce risk, de-risk your trades as fast as possible. That's awesome. However, earnings are always a gamble. Now, if you have no risk in the trade, you may want to take that gamble. I will not tell you to do this. If you have no risk in the trade, you may want to take that gamble. It's akin to walking into the casino and you can put it on red or black. And the casino's like, hey, listen, if you win, you get to keep the money. But if you lose, you don't lose anything. You may want to do that. I am not advocating for that. I personally would not do that because trading through earnings is a big risk. So no thanks. Steve has a friend named Thor, born on a Thursday in a thunderstorm, and he's 6'8". Sick. I wish I were 6'8". I only got to 5'11". I'm so jelly. I'm like and it's funny too, because like in Texas, at least, I feel like the humans are decently bigger. My son is 13 and he is 5'9", and I'm looking at him and I'm like, you are going to be bigger than me before you start high school. What is happening? What is happening? Let me keep going here. Great questions today. Thank you so much for all the questions. You make this possible. Gina, is today the day when we would sell our SGOV? Yes. So the final day of the month. This is the one stock. This is the one stock that you can actually plan on selling at the top and buying in at the bottom. SGOV today is the day where it will be the last tradable day of the month. So SGOV will, on Monday, it will crash all the way down. Where's my, yeah, there we go. It will crash all the way down to somewhere down here for the amount of the dividend. Whatever that dividend value is how much it's going to crash down. So what's neat about this is that you can take advantage and ride it all the way up, cash out at the top, buy back in at the bottom. You actually get the money, the equivalent money. There might be a little bit of rounding here and there, but you're going to get roughly the equivalent money that the dividend would pay. But you get in 4, 5, 6 days sooner. Like let's say the dividend pays right here. You've already got that much more capital appreciation. So basically you can get out the top, get in at the bottom, get right back in before the dividend is paid. So if that is what you're doing, today would be the day to do that, but only if you do that. I don't look at the VIX for anything. Let's see. Oh, okay, Steve. When your account goes up, do you adjust the size of the trade according to the new portfolio value? So link down below is this spreadsheet. In there, you can actually go to the position sizing dashboard. This will automatically update based on what you put in your portfolio, right? As your portfolio grows, your position size will grow commensurately because it maintains the same level of risk in any position. So I hope that answers the question. I think the answer to what you're looking for is yes. Trey. What's up, Trey? Why do we only look at buy signals from the last 5 days? Well, because we don't want them to get stale, right? If we go back to Costco, like that's a perfect example. This is still a buy signal from January 9th. You could still be holding it, but dude, it's 3 weeks old. Like the entry was there 3 weeks ago, and it's been on a big move. You don't want an old stale signal. That's the real answer. Let's see. When is the ex-dividend date for SGOV? It's the last day of the month. Let's see. I'll do one more question. I'm looking through all the questions here, trying to find the bestest one. Let's see. Okay, great question here. Meg, when traveling, do you trade on your phone? So I recently did this. Here's the deal. Previously, I would never trade while on vacation. Previously, I would never. I am competing in the US Investing Championship this year, so I'm taking things a little bit differently. I've made my wife well aware of this. Listen, anytime we're traveling, I still am going to make sure I trade in the last hour of the trading day. Whatever we are doing, if we're at Disney World, if we are literally on a aircraft carrier, if you know, you know, or if we're traveling to do anything, I will pull over on the side of the road. You and I are going to switch driving if that's the case, and I'm going to trade. If I have to buy the internet on the airplane, I'm going to trade because I am in the championship this year, and I'm going to make sure I do the very best that I possibly can. Do you trade on your phone? Yes, but I like a PC personally. It's so much easier to do on a PC. Most trading platforms have an app, and they're fine. I just like to be able to see the options chain. I like to be able to do all my calculations. I like to be able to fill in the spreadsheets. And of course, that's more difficult on a phone. Any cybersecurity concerns or recommendations? I'm not the guy for that. I'm not the guy for that. So this was great. Thank you so much for your incredible questions. This community service, this judge-appointed community service that I do on Friday mornings is one of my favorite times of the week because everything that I do is to help you out, right? At OVTLYR, our main goal is to make you successful and at no cost. And then once you're successful, you can come and join us as an OVTLYR, and then you'll see what it's really like. So if you're ready to save time, make money, and start winning with less risk, click one of these two videos that's popping up right now. We'll talk soon.